Does technical analysis really work in gold trading? In this video, we'll discuss whether the traditional methods of technical analysis, support and resistance, key levels, breakouts, price action patterns can be reliable for making predictions in this specific market. We will explore the dynamics of gold prices this year and discuss the most efficient way to trade gold. So if you're a gold trader or if you're simply interested in market analysis, you should not miss this eye-opening discussion. Traders, please don't forget to like this video, subscribe to my YouTube channel, and let's start. This year, gold opened in a very bullish trend. We can see that the global trend on gold was bullish on a daily, and locally, after a correction, we see a confirmed minor bullish trend on gold. The first 2 weeks were very bearish for the market after the price set a new higher high. At the end of December, we saw the correctional movement. The market started to correct within a bullish flag pattern. And then finally, the price approached a very important support. And that was the first very important setup that I was monitoring this year. Traders, don't miss my next trading signal. Subscribe to my free Telegram channel now and get up to 4 free signals daily. The link in the description below. After the test of a key support, we saw multiple rejections, and then the price formed a high momentum bullish candle. Also, from the technical analysis perspective, we also got here the inside bar formation, and this bullish candle violated the range of the mother's bar. So here we got a lot of bullish trend following signals, and that breakout clearly indicated that the market is returning back to this bullish trend, and I was anticipating a bullish continuation. However, it turned out that that signal was false, and after a violation, the market started to fall, and you can see that we dropped below the broken resistance of the flag, and we also violated that key horizontal support. Why this false signal is so important for us is that key levels, price action analysis, trend analysis are the most reliable on a daily time frame. And such a strong combination, bullish breakout, key horizontal support, bullish trend, bullish pattern, should have very high accuracy on a daily time frame. That was the first time this year when technical analysis completely screwed. This bearish movement was very important from the classic price action and also smart money concepts perspective. Here we got a confirmed violation of a neckline of a head and shoulders pattern. It is a very important bearish signal, and it indicates the trend reversal, the violation of a bullish trend and the initiation of a bearish trend. At the same time, we also got the change of character right here. Very strong smart money signal. It is when the price violates the level of the last higher low in a bullish trend. It is a very important signal. These 2 signals made me very bearish, and after the violation of that support, with my students we were anticipating a bearish continuation at least to that key daily structure support. However, it turned out that after the retest of a broken neckline, the price just went higher, and you can see that this setup here became invalid, and again we got false signals here. This time a classic price action pattern didn't work. A very strong smart money signal didn't work, and from the trend analysis perspective we got a confirmed bearish trend violation, and that signal was false as well. Then I spotted a very strong bullish swing trend following signal. It turned out that gold managed to violate this solid falling trend line, and trading in a global bullish trend on a daily, this violation right here was a very strong bullish confirmation. And after a trend line breakout, I also spotted one more very important signal. The price formed the cup and handle formation and also violated its neckline, giving one more strong bullish signal. However, again, it turned out that these 2 signals were false, and instead of going higher, gold started to fall again. Swing signal failed, and this classic cup and handle formation gave a false signal. The price formed a high momentum bearish candle and dropped heavily. And with this bearish movement, the price violated a very important key rising trend line, and also the price violated multiple very important supports. So again, from the technical perspective, this bearish movement right here was a strong bearish confirmation, and that violation indicated that the price will keep falling at least to that support. And you can see that one more prediction failed miserably, and again, technical analysis doesn't work. Again, technical analysis leaves only false signals, and you can see that after a breakout, a strong bullish rally initiated. From the beginning of the year, technical analysis doesn't work. All the signals that we saw on a daily time frame failed miserably. And if you just started trading, you could easily come to the conclusion that technical analysis doesn't work on gold, and it doesn't make any sense to rely on technical analysis in gold trading. And that is completely right. And in that exact period, technical analysis fails. I'm trading gold and forex for more than 9 years, and each and every year I notice that there are the periods when some strategies, some techniques do not work. And sometimes these periods are quite small, but sometimes these periods can be very long. The only proven way to overcome such periods is the consistency and the risk management. Risking a tiny portion of your trading account and following your rules, you can survive this stubborn market. What exactly causes such an irrationality of the market, I don't know, and I think no one really knows. Here's what ChatGPT says. One key reason is the influence of human emotions and behaviors on market movements. During times of extreme fear or greed, market participants may make decisions that deviate from rationality, leading to unpredictable market movements that may not adhere to traditional technical analysis patterns. And I guess you saw, traders, what is happening in the world. We have so many war conflicts at the moment. We have the screwed economy, and people really do not understand what is happening and what to expect. And for such reason, we see so many irrational movements. However, the rule is that the markets always tend to return to normal conditions. But the problem is that no one knows when exactly it will happen. There is a famous quote by John Keynes that the markets can stay irrational longer than you can stay solvent. And only a proper risk management will keep you solvent longer than the market stays irrational. Let me know, traders, in the comment section, how are your results in gold trading so far this year. Also, traders, if you have any questions, let me know in the comment section. Also, do not forget to subscribe to my free Telegram channel, the link in the description below, and traders, do not forget to watch my other videos.